Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. The spotlight shifted to Israel during the weekend as a state of war is declared, rockets being launched from both sides and potentially multiple other countries being involved in this war as well. But on Friday, the non-farm payroll headline numbers surprised the market, but the euro ended the day stronger compared to the dollar. Good morning, JK. Another busy weekend for you, I'm sure. Keen to hear your thoughts now that there is a new war which markets need to deal with as well.
Yeah, good morning. Yes, we in fact had a very volatile Friday post jobs numbers, and then even as things were settling down towards the close, the weekend news of Gulf disturbance has come into the focus of the markets. First, onto the jobs market. Yes, we had a big surprise, upward surprise on the non-farm payroll number, which almost doubled the expectations of the market. And the market promptly reacted by buying dollars, selling treasuries, and then even the stock futures were down. But on a reassessment, it was found that the numbers don't gel with many other data points that we had seen during the week. The ISM, manufacturing and services, did not show any indication that the employment was rising, and then the unemployment rate itself was around 3.7%, which is not very very low, and also the the wage inflation was also down. So market, which was almost prepared for a high number, in terms of U.S. economy strength, was not so much excited about it eventually, and therefore we saw the dollar being sold off. Another reason why the dollar got sold off was also because the U.S. Treasury yields for 30-year, which retested the 5+ mark, found lots of buyers, and that led to dollar retracing all its gains during the post data. Also, we had seen the dollar index touch a high of 107.35 during the, which is a technical target that we were also looking at, and that has been met, and therefore not much to discount in terms of positives for the dollar. And that's the reason why we saw the dollar index getting sold off. And in fact, overall, stock markets also took it positively. Again, stocks have been sold off for some time now, and with the job market still looking good, economy still looking okay, and yields retracing, there are reasons for stock market also to rejoice. Now come to the weekend development. It was definitely a big surprise. And it was a surprise even for the Israelis, I think, from whose side we have seen kind of intelligence failure. They have not anticipated this. And it has happened exactly 50 years after it had happened earlier, in 1973. And so this has put the whole thing, on a reverse gear once again, particularly for oil, which has, started to go up. And the dollar index itself has not gained much, but there is a bit of safe haven buying in the dollar, which has brought down the euro and GBP. Yen is quite steady, and gold, which is considered as a safe haven of along with the treasuries, has gained about 0.8%. Gold was already getting good support at 18.05, 18.10, so that was to be expected technically to bounce as well. Now, where we go from here is entirely up to how the conflict evolves, whether it escalates, and how big it gets, and globally how many bigger geopolitical players get involved, particularly US and Iran, etc. So it's an evolving situation. Markets will be on a wait and watch mode. I don't see immediate big volatility. It will all be news driven. And I think over the period of this week, we should know whether the things get worse. And in that case, we should see some safe haven, more safe haven buying in the dollar, more safe haven buying in the gold as well. And of course, oil depends on, whether the supply chains get affected due to the war. In fact, before the war news came in, we had seen over the last 1 week to 10 days that oil prices had fallen from almost 98 to 85. That's on the Brent, and this was reportedly on assurance by Saudi Arabia to US that they would possibly take back some of the output cuts they had announced earlier. This is based on an understanding with the US about their support to Saudis on some of their pacts on the defense, etc. But the war probably has spoiled that, and so we have seen the oil prices going once again. So expect volatility. Dollar index possibly well supported for now, but medium term it does look like if 5% is the line that's going to be held well on the yields, I think that is possibly a sign that dollar will also be topping out. Going by some of the past members of the Fed and the Treasury, we can also see that the higher rates have not been working to contain the job market, which is anyway not giving. Which is anyway giving a mixed picture, and therefore I think rate hikes may not be so much on the cards going forward. It's only how the economy performs with the higher rates which are already ruling, and when the rate cuts will happen in the US, that is one thing that we'll watch out for. As far as the USD INR is concerned, surprisingly, USD INR also reacted lower after the dollar index fell, on the jobs report. But I think the war news has pushed it up again towards 83.20. Oil will be a factor for INR, apart from the fact that lack of flows. When we'll see RBI once again filling the gap, and again we'll see the evolving situation. That the situation gets worse and the oil prices start going up once again. But even then, RBI's actions may continue in view of the inflationary impact. And in fact, the monetary policy on Friday also was a status quo event, but there are indications of possible OMO sales of bonds, government bonds, has pushed up the Indian yield also higher, and stopped the narrowing that was happening in the US and Indian yields, which is actually slightly supportive of the INR. So overall, I think we'll wait and watch for the rupee. I think for the time being, RBI will protect the 83.30 levels, and downside well supported at 83.10 until this war situation eases. Thank you.
Thank you, JK. And of course, on Friday, we had the jobs number, which initially it led to some sort of dollar buying, but then as market reassessed, the picture was actually mixed when it comes to the labor market, and dollar was sold off. But post the weekend development, we are seeing some safe haven buying. Even gold has rallied, and so has oil prices. So evolution of the conflict will determine how things pan out. There will be a lot of news-driven volatility going forward. For rupee also, we reacted lower post the jobs number, but the war news has again pushed it higher. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.